Thank you. I appreciate all the testimony, and I'm going to begin the questioning. It appears as though we're going to have votes again at 3:45, so my plan is, as the chair, I'll shorten my questions to try to get as many as we can in, and then dismiss the first panel, if that's all right with the rest of the committee. Well, our final witness gave us a contrast, but I want to go back to what Mr. Kelly has mentioned when we're talking about contracting credit and accessibility to the smaller institutions for in the different communities. You listed 3 ways. You mentioned interchange. You also you said that your banks could be out of certain business lines, and that with the mortgage risk retention provisions, which I guess is in the qualified, what is it, the qualified, mortgage. Those are 3 pretty significant issues. We did have the hearing on interchange, so if you could talk a little bit more about the latter 2. What kind of business lines are you concerned that you might fall out of under this regulatory regime? And also, let's talk about the mortgage risk retention and how that will influence credit to the little guy.
Thank you, Madam Chairman. The mortgage risk retention, to speak of that first, our bank provides a retail mortgage product of about $20 million a month in mortgages. We also provide a warehouse funding for over 900 locations across the Midwest, which make all prime, no subprime, mostly government-insured loans of one manner or another. Because of the really unknown nature of what the risk retention is, the tighter that risk retention is drawn, the more difficult it is going to be for any bank of our size or smaller, or really any moderate-sized bank, to have the capital to retain 5% of every mortgage that they make. So if that rule is drawn narrowly, we're concerned that we and others will be out of the mortgage business, and thereby the mortgage business will move away from community banks, and we will not be able to be competitive in that particular market.
Let me just clarify here so I make sure I understand exactly. This provision does not exempt any community banks or certain asset level down. It cuts across every financial institution that is in the mortgage business. Is that correct?
Yes, Madam Chairman, that is correct.
Okay.
We are also concerned about the competitiveness of the supposed 2-tier system relative to the debit cards, and I realize that was one that you said we've already had some discussion on. But likewise, that will require us to examine our fees and look to see how those fees could be made up that we'll no longer be getting from the debit cards. As an example, the fact that we have to retain, all banks retain, the fraud risk of a transaction such as that. In our particular instance, we actually lost during 1 month when we had a scam that was in the area. The debit card scam resulted in a $143,000 loss for our bank. There's no way that 12 cents makes up the fraud loss, much less that it makes up and allows us to make any money. From a standpoint of being able to lose business lines, we're concerned about the municipal advisor provision of the SEC rule, or the SEC attempted position, because we believe that while in our communities, and we cut across many communities in Oklahoma, we have many school districts, we have all sorts of municipal type companies that we bank. We believe that those rules, if construed the way that we understand the SEC is attempting to construe them, will not only require us to register my teller and my new accounts and CD clerk, but will also give the SEC the ability to come in and examine us for those things. One more examination regulatory scheme that we will have to put up. Yes, ma'am.
Have you all made comments or been asked to weigh in on the formulation of that rule?
Have we made comment? Yes.
Yes.
Our bank did make an extensive comment, and the ABA likewise has made comments. We've had a number of banks that have made comments in that, and we've tried to point that out. We believe that we provide marvelous service to the municipalities and the school boards and the like across the state of Oklahoma. We merely warehouse their money or put their money into an instrument. We're not serving as a, quote, municipal advisor, yet the requirements for us to go into the municipal deposit rulemaking and register, as well as with the SEC, both of which will be very onerous.
All right. Thank you. I'm going to turn